Good morning, everyone, and welcome to the webinar. My name is Michael Stahl. I'm the Director of Marketing here at PFG Marketing Group. Thanks for logging in with us this morning. Just as a reminder, you are all muted. If you have any questions, feel free to type those in. There's a couple different places, either in the Q&A box or the chat box, and we will definitely get to that. We've got about 30 minutes scheduled this morning, depending on questions. So once again, want to thank you all for tuning in. At this time, I'm going to turn it over to Justin Shipman. Justin's the Regional Sales Director at Lincoln Financial Group. He oversees 11 states. He's been with the company for about 2 years. And probably the most impressive thing is just with some of the concepts he's going to be sharing this morning. They've seen their business up 60% year over year using these ideas. So this is an extremely innovative writer, just like we had in all of our ads. And obviously, we're happy that you all could attend this morning. So, Justin, I'm going to go ahead and turn it over to you.
Great. Thanks, Michael, and thanks, everyone, for attending this morning. I appreciate you taking the time and definitely want to make it worth your time. So, I have a couple of goals. Certainly help you identify clients, maybe in your book of business, that this concept, this new income rider, can help. And literally, as we're going through the presentation, think about clients that you've worked with in the past, some of the challenges in that, because this rider may actually be able to help overcome some of those challenges. And if you do think of a client, just jot down their name, and certainly my friends at PFG can help on the illustrations and that for you. So, maximizing non-qualified assets with i4LIFE. It's the title of the presentation, and ultimately, we know non-qualified assets. We typically think, okay, how can we do that? And we have a lot of different options, right? Income riders on index annuities, annuitization on different annuities. But, there are challenges with all those types of products. And I think what you'll find is that i4LIFE is a great solution that'll help you overcome the challenges that clients have with some of those other options. And ultimately, it creates more income, more control, more flexibility for your clients today. So when we take a look at the marketplace, we know that we're in the second longest bull market run. Clients are getting a little bit concerned about what they should do with their money. Is the market going to go down? Because after all, the headlines are kind of telling them that that's what may happen. But what choices do you have? When you take a look at 10-year treasuries, we're still kind of at this low interest rate environment, and 10-year treasuries are almost at 3% today. But you know what? People are looking for more upside potential, and they're still looking at what indices like the S&P 500 can do for them. How can I grow my money, protect my money? And that's one of the great benefits of index annuities is that, we get that upside potential while we minimize that downside risk. And within our product that this i4LIFE rider is available on, I'm going to focus on our OptiBlend contract. So i4LIFE is available on OptiBlend 7, a 7-year surrender charge schedule, the OptiBlend 10, a 10-year surrender charge schedule. But that product offers uncapped strategies. In fact, the spread on our uncapped strategy on the 10-year product for over $100,000 premium is less than 1%. It's just 95 basis points. And we've seen returns up to 18%. End of January last year to January this year, we saw 18% less of the spread, over 17% being credited on this index annuity. And for an annual cap, we're up to 6.2%. So this concept will let your clients still have that growth potential, but create this income stream that's going to be a little bit different than what you're used to. And ultimately, when you're looking at planning and helping clients out, do you have a plan to help guard against your client's retirement income against market downturns? We know the sequence of return risk. If I retired back in 2000 and then the market went down for a couple of years, well, you know what? My fixed income may have just been decreased. So here's a way that you can create that guaranteed income stream for your clients, help them safeguard against market downturns while still giving them the same crediting that you're familiar with index annuities. So normally when you take a look at helping clients, there are 4 different things that we can do. And you're probably familiar with dollar cost averaging, portfolio diversification, asset allocation, and portfolio rebalancing. these are all time-tested strategies that can help. But sometimes when you look at income, that isn't necessarily things that can help the best. And after all, if I'm using a mutual fund or a variable annuity, I may not have that income rider on it to create that guaranteed income stream. And one of the challenges that you're going to have is clients are seeing the headlines today. They're getting concerned. We know interest rates are low. So how do you attract new clients and new assets in 2018? How do you maximize revenue? Well, certainly going in, offering different opportunities. And this is really kind of something new. It's been available on our variable annuity products, but it just launched on our fixed index annuities as of October last year. And as we go through this, it's a patented strategy that only is available through Lincoln. So it's something that most clients, most centers of influence that you work with, they may not be familiar with it. So let's share a new idea and see what we can do to help the clients. And for a lot of clients, they're looking to maximize their net spendable income. They're looking, they have significant savings. They're interested in protecting and passing their assets to their kids and families, kind of that legacy planning opportunity. They may be looking to provide support and generate income for a spendthrift family member or dependent with special needs. Or they may even be interested in supporting organizations through monetary charitable support. So, there are a lot of different opportunities, and how do you overcome kind of the challenge? Well, the challenge for you is to find a way to help these clients achieve the things that are most important to them while letting them maintain that lifestyle, right? Because, how do I create an income stream for a special needs child, but still maintain access to the funds if we need additional funds? Well, i4LIFE can actually help you do that. And even those clients that want to retire before age 59 and a half, well, we can help them do that as well. So we advertise this as managing retirement income risk through annuity solutions. i4LIFE is definitely an interesting solution. It's a patented strategy, as I mentioned, only available from Lincoln. It provides guaranteed lifetime income with downside protection. Now, that's not different than any other income rider on an index annuity. The difference is the tax advantages that you're going to get with non-qualified money, and we'll get into that. Clients still will maintain access and control of their account values, and one of the unique things is that we can create joint life income coverage on any two people. So whether that's a grandmother and granddaughter, or two business partners, or even two sisters living together trying to minimize expenses, I can create joint income. And that's a unique opportunity that i4LIFE does. I don't know many other companies that have a strategy that can help with that joint income scenario. And, to kind of give you a better idea of the tax benefits and how this may work for your client, let's take a look at Joe. Joe's ready to turn on a stream of income. With i4LIFE, you do have to start income the first year, but Joe's not comfortable with market volatility. I mean, market's been going up for a long time. He's concerned. He'd rather put his money somewhere with more stability and control. He wants dependable income for life and control and predictability over taxes. And taxes are something that I don't know if we talk about enough with clients. For those affluent clients, taxes have a major impact on what their net spendable income is going to be. And even if you're not affluent, it can have a major impact on that overall net spendable income. So normally with index annuities, non-qualified funds, it's last in, first out. That means all the gains come out first, and it's taxable. So what would Joe's situation be if he just used a regular income rider on index annuity? Well, let's take a look and compare. And ultimately, when we take a look at that difference between that regular income rider, when we have $250,000, we're looking at about $14,000 of income. But you can see the blue example, that's that last in, first out type situation. And it's, if we use an analogy, and I like using a cake analogy, it's like you're taking the frosting off the cake. You're taking all the gains off the contract until all the frosting's gone, until all the gains are gone. Then finally, you get into the principal, and when you get into the principal, there's no tax on that. But you know what? If the index annuity is doing what it's supposed to do, maybe it's growing by 5%, the client's taking 5% for an income stream. So that tax situation, they're really never maximizing the income stream. i4LIFE is different. i4LIFE lets you take a piece of the frosting and a piece of the cake with every single check. So that almost $14,000, the difference is going to be on that taxable income. And you can see that the overall difference for i4LIFE, it's almost $2,700 on a $14,000 income stream. And the difference is that we're really treating this as an annuitized contract. Now, before you think, well, I don't want an immediate annuity because the client doesn't want to give up control, with i4LIFE, the client maintains full control of the contract, full access to cash values within the contract. So they're not only getting more spendable income for, as long as they live, well, ultimately they have a predictable income stream. And think about those clients who may have limited means. If I could actually put them in a better tax situation where they know what type of income that they're going to get, as opposed to, okay, when am I paying taxes? When am I not going to have to pay taxes? You know what? They may like that better, because here's a way that I can schedule this out, have this income stream, minimize the tax impact, and help the client out. And you know what? $2,700 almost out of $14,000. That's a big difference for a lot of clients today. What would you do with an extra $2,700? Would you buy season tickets for whether a baseball team or football team or something like that? Maybe you could do that with that. Would you go on a trip? $2,700, you might be able to go on a pretty nice trip. So, what's the difference between i4LIFE and that regular systematic withdrawal? It's tax efficiencies. And creating a taxable, efficient lifetime income stream is what i4LIFE is going to do, especially when we compare it against the regular income riders. And we have a good rider. We have the Edge rider at Lincoln, very competitive, bonuses after 5 years and 10 years, but it doesn't have that same tax efficiency as i4LIFE. So one of the unique things about i4LIFE is the tax benefits, and non-qualified investors can create this legacy planning opportunity and maximize the income and keep control of the assets for their family. And what we can do is, I mentioned before that the growth, both of them are going to be tax deferred, right? So investors don't have to pay any taxes until they start taking income. But when you look at income, the regular income rider on an index annuity has a last in, first out type tax situation. Whereas with i4LIFE, we create an exclusion ratio on the non-qualified funds. It just creates that advantage. Clients getting a portion of their principal back, as well as a portion of gains, and it lets the client know what they're going to have for lifetime income. One of the unique features, though, is what happens for legacy. Normally on an index annuity with a regular income rider, there's no step up in basis. It's, beneficiaries have to pay the taxes when they inherit it, and typically it's, either as a lump sum or over 5 years, unless you do non-qualified stretch or even a qualified stretch program. With i4LIFE, we actually create a first in, first out type benefit for the client. If there's a cash values available during the access period, and the access period typically is all the way out to age 95, anything that passes to the beneficiaries, those beneficiaries will have access to take out the basis of the contract and distribute out the gains over the lifetime. Now, they don't have to do that. They could take full amounts out, pay the taxes, and be done with it. But think about those affluent clients and how, when a person dies, sometimes we have unexpected bills come up. Well, if I can take money out and not have to worry about taxes on it, well, now I have a pretty nice source of funds to pay those unexpected expenses. It helps create a legacy. It helps the beneficiaries maintain more control, and it helps them stretch out the benefit of the contract, distribute the gains over the remaining life expectancy, minimize the tax impact again. This is very unique. I don't know any other way that clients can take a first in, first out type approach on an annuity to have access to the principal of the contract and distribute those gains out as they want. So think about your affluent clients. What are they doing? What type of plans do they have to pass assets to their kids? And remember, this index annuity, you still get the benefit of the crediting strategies. We have competitive crediting strategies, so there can be growth within that cash value and tax efficiencies on the income stream. So just to kind of give you a little bit more of a background on i4LIFE and what Lincoln's been doing with it. This concept's been around since 2000 on our variable annuities. Investors have put more than $22 billion with Lincoln and i4LIFE, and we pay out over $1.5 billion of income, last year with this concept alone. There are more than 121,000 consumers that receive i4LIFE, and total annualized payments is 6.6% of the account value. Now, I know some of you may be saying, well, wait a minute, how come Lincoln can do it and nobody else can do it? Well, remember, this is a patented strategy. And just to kind of make you feel more comfortable, we have a couple of private letter rulings that we can share. And private letter rulings normally apply only to the individual, but we actually got the private letter rulings as the administrator on the contract. So it actually applies to all the contracts that we're administrating, and it helps go through how we can do this, how we can create this exclusion ratio and still allow client access to funds. It's a unique concept, unique strategy that your clients probably aren't familiar with, and I think it can help a lot of different clients kind of minimize that tax impact, create that legacy program, just put them in a better position. But with the webinar invite, we talked about, joint life payouts, we talked about trust ownership, we talked about legacy planning, and clients, that we find are really good opportunities with i4LIFE are certainly clients that are looking to have income before age 59 and a half, or those clients that need that joint income for someone who isn't a spouse, or even the legacy type planning opportunities. Because with i4LIFE, I can actually do a non-qualified stretch and add i4LIFE as an income rider on that non-qualified stretch contract. So I'm not only getting the benefits of the non-qualified stretch and distributing gains out over the life expectancy, but I'm actually creating guaranteed lifetime income when you use i4LIFE for that scenario as well. And then certainly trust as well. So we know maximizing income is important, but it's not always the client's primary focus. We can help clients do the things that are important to them. Now, remember, we're talking about non-qualified money. i4LIFE is available for qualified money as well. You just don't get those tax efficiencies, right? But you still get that lifetime income. You still have access to cash values, and sometimes, things like trust in that or income before age 59 and a half. Well, sometimes that's actually what clients are looking for, even with qualified funds. So let me dive deeper into each client scenario. Normally, if you have a client that's looking at income before age 59 and a half, that they're going to be subject to a 10% penalty, right? And unless you do substantially equal periodic payments, and ultimately, sometimes with that, you're losing control of the asset, especially if you're using an immediate annuity. That's the knock against single premium immediate annuities, that, look, I give the insurance company the money and I just get this check for as long as I live. And if I die prematurely, I may not benefit, or my beneficiaries may not benefit. With i4LIFE, I can create that lifetime income stream before age 59 and a half, and it actually satisfies one of the exclusions under substantially equal periodic payments. So there's no additional taxes. Clients retain the upside potential because the crediting strategies within the OptiBlend contract, within that fixed index annuity, they can change their allocations, they can have access to money. And if they access the money, it's kind of interesting. Any withdrawal that they take is going to have the same exclusion ratio as the income. So if I need 20% because there's a storm in Phoenix and I need to get a new air conditioner in August here, well, you know what? you have access to the funds of the contract. You're still going to have that same exclusion ratio. Obviously, the income is going to go down. Future income is going to go down proportionately, but it's available to help clients out. Now, we talked about joint income coverage for 2 lives is available even under age 59 and a half. So if you have a couple that they're retiring early and they want to create that joint income, we can help and help minimize that tax impact again. For trusts, I don't know if any of you work with trusts or work with attorneys that work with trust clients, but many high net worth investors want to minimize the tax burden for their beneficiaries. And at the same time, they want to create or take a tax efficient income stream while ensuring that the assets are structured correctly to streamline any transfers to beneficiaries. So they'll take a look at using a trust. Well, unfortunately, trusts are taxed at a very high income tax rate, right? The highest income tax rate. And so ultimately, I'm going to be over 30% as a tax for any asset and growth within that trust. Well, I can go in, I can use i4LIFE, create this exclusion ratio with those non-qualified assets. So I'm helping to minimize the tax impact of the assets within the trust. And it also solves the common non-natural owner problem with trusts. Since i4LIFE is recognized as the immediate annuity, it benefits from the exception to taxes on the annual gains and the 10% additional tax on withdrawals. So here's a way to not only minimize the tax impact, but avoid some of the penalties that you would see with other type of assets within that trust. So whether you have special needs trust or spendthrift type protection, here's a way to help clients that are utilizing trust to pass what they want onto the beneficiaries and minimize the income tax for them. So income for someone who isn't a spouse, I've talked about this a lot, but you might have a sibling, a friend, domestic partner, a business partner you want listed as the beneficiary of your annuity. Under most annuity guarantee riders, they're only going to utilize one life. So think about those buy-sell agreements that you have for life insurance. How are you funding those? Well, you know what? Oftentimes we take a look at a single premium immediate annuity to fund that life insurance contract. What if I could actually create an annuity payment that was joint income that allowed the money that was left over after the first person passed to go back into the business or go to that remaining business owner? Now they not only buy out the full company from the other family, but they have some extra cash to do the things that they want to do when they take over the business. i4LIFE can structure payments to cover the 2 lives, and the second covered life can be anyone you choose. If you pass on, your loved one continues to receive income for the rest of his or her life, or that business partner life program, I can go in, access all that cash value, just have a pool of extra money if there's cash values left over. Or I can create that legacy, that birthday present for the grandchild each and every year. So while the grandparents are alive, they get the check, but once they pass, then the check goes to the grandchildren. And, that's kind of a neat opportunity for a lot of clients. And most contracts don't allow that joint income. Here's one way to actually do that. But I'll tell you, a lot of the premium that we're seeing and a lot of growth opportunities that we see with i4LIFE is actually 1035 exchanges. Until recently, if you inherited non-qualified annuities, your options were pretty limited. Lump sum distribution or 5-year distribution, right? With i4LIFE, there's a recent private letter ruling that opened the door for post-death 1035 exchanges. So you can move an inherited non-qualified annuity to another carrier without tax consequences. So John Doe deceased, for benefit of Jane Doe, can be moved over to Lincoln. Now, if you want to do the planning ahead of time and make sure that this is set up ahead of time, absolutely you can do that. But now there's an opportunity for, even after a person passes, let's move the contract over before they choose a death claim. And then we go ahead, we set up i4LIFE and create that tax advantaged income stream. It's a great wealth transfer strategy. And, your client can still have that upside potential of the S&P 500 strategies, our uncapped volatility control strategy, our annual cap, or even our fixed account if that's what they want. So they still have access to the funds. It's just now they have better flexibility, more control of what they're paying in income taxes. It's a unique opportunity. We've seen huge cases coming in from this, and we certainly invite you to think about your book of business and how this might be able to help you kind of drive more business. Talk to your centers of influence about this too, the accountants, the attorneys. They may not be aware of this, and it's something that Lincoln can work with. We have a couple of different brochures available on this that can help you out. So a little bit more credible when you're going in and talking to those people about it and to your clients. But think about it. Instead of having to pay taxes as a lump sum distribution or over 5 years, here's a new opportunity, and it creates that guaranteed lifetime income. So, a lot of contracts you're just doing withdrawals. That's non-qualified stretch. You're just doing a withdrawal. There's a chance you could run out of money, especially if you live a long life. Well, with this, I'm creating a lifetime income. Your client's still taking that withdrawal because it's an i4LIFE income payment, but ultimately they still have that lifetime guarantee, so they know that they're not going to run out of funds. Now, we've gone through a lot of different things pretty fast here. I wanted to keep it close to 30 minutes today and appreciate you taking the time. i4LIFE, again, does a lot of different things that can help your clients. It creates the tax efficiency for income. That can not only help your clients with limited means to create more dollars instead of having that last in, first out taxation. It can help create a steady income stream, predictable income stream, where they don't have to worry about whether they're taking gains or basis of the contract. It can help beneficiaries because we put the benefit of first in, first out opportunity, where beneficiaries have access to the basis that remains in the contract. They can take out the basis, go use that for what they need. Maybe that's paying off final expenses. It's just an extra income source for them. They can stretch out those gains over the remaining life expectancy. We've talked about the 4 other opportunities: the trust, minimizing taxes on the trust, using joint income, that 1035 exchange, and ultimately helping clients that are looking for income prior to age 15 and a half as well. So with that, I hope you're as excited about this as I am. It's a unique concept. It's something new that a lot of people are not familiar with, and I'm glad that you took the time to join us today. So, Michael, I think what we can do now is let's open it up to questions. If people have any questions, certainly feel free to use the chat box and type those in. Michael, do we have any questions at all?
Yeah, actually, we do have a couple questions, Justin. So the first is, can this be used for fixed period immediate income annuities?
Yeah, so it's only available on our index annuity contracts. So, our OptiBlend or OptiChoice contracts. It's not available on New Directions or OptiPoint contract, and it's only available in a longer term. So OptiBlend, we just launched a 5-year contract with super competitive rates, but i4LIFE is not available on that. It's only available on the 7 and 10-year options. So there is a fixed account within our index annuities, though, and it's paying something like 2.45% up to 2.45%. So if a client is looking at that fixed account and wanting i4LIFE, they can do that with the index annuity.
Good deal. Okay, and then another question we had come in was, does the rider have to be elected at issue?
Yeah, with i4LIFE, I should probably say the cost of the i4LIFE rider is 95 basis points. It does need to be elected at time of issue. That's different than our Edge rider. Our Edge rider will actually allow you to add it after a contract's been issued. With i4LIFE, since the income has to start within that first year to kind of get that tax efficiency in the exclusion ratio, you have to elect it at time of contract.
Okay. And then lastly, I see a question from Richard. Are these slides going to be made available? I could actually answer that one. So this webinar is being recorded. So give me about 30 minutes and I'll have the recording all ready to go. So if any of you, I know Justin covered quite a bit of information these past 30 minutes. If you want to go back over it, feel free to call our office on the number you see on the screen. I'll have that recording for you. Also, I'd like to say any sort of marketing material that we can get in your hands. Justin shared a few different concepts of who you could approach, whether it's clients or centers of influence that you might have in your business. We'd love to get that stuff over to you. Also, if you'd like to see an illustration on the OptiBlend, I mean, we've been extremely impressed with that product, the returns that it's shown that Justin mentioned at the beginning of the webinar. Just a powerful concept when you couple that together with the i4LIFE. I think it's just an innovative thing you could offer your clients. So that looks like all the questions that we have. Justin, you did a great job. Thank you so much for joining us this morning. Do you have anything else that you'd like to add?
No, I mean, I'd certainly invite everybody to take a look and identify clients in their book of business and just take a look at the tax efficiencies. It's a little bit different, right? So if you're looking at the withdrawal factor that we're using with the i4LIFE, it's not comparable with the normal income riders because you get that exclusion ratio on the non-qualified funds. And remember, the higher the tax bracket that the client's in, the better i4LIFE is going to look. So, bear that in mind. I know it's different, and we'll give you a calculator that kind of gives you an example of what the net tax effective yield is, and it's higher. Instead of 5%, it's maybe 6.5%, based on what the gains are in the contract when the client starts this. But I know it's a little bit different. These are great concepts, great opportunities to go talk to your clients about, and hopefully you've all kind of identified different opportunities. So I appreciate the time, appreciate you, Michael, and giving me the opportunity to share this with everyone. Please work with my friends at PFG, and they have a lot of expertise there and can certainly help you with your customers today.
Great. Well, thanks a lot, Justin, and thank you all for attending this morning. Hopefully you got a lot out of it, and if you need anything, feel free to give us a call, but everybody have a great day.